Good morning, investors and distinguished guests. I would like to welcome everyone to the Set Opportunity Day of Thai Union Group Public Company Limited, or TU. Today, we are presenting you with our results for the third quarter of 2019. Joining us today are Thai Union's executives, Mr. Bes Wayanon, Assistant General Manager, Investor Relations, and Mr. Jörg Eirli, Group CFO, who will be joining us shortly. On today's agenda, we will have a look at Thai Union's company overview, our third quarter key financial highlights, recent developments, financial results, and our business outlook going forward. To begin this session, we are delighted to present to you our corporate introduction video. We hope that it may help you get to know Thai Union better for those who may not be familiar. Enjoy.
How do you grow from a modest family business to a leading global seafood company? First of all, you need to be passionate about everything you do. You have to make sure that all of your ingredients and produce are top quality all of the time. You need to know that everything comes from trusted and reliable sources. You must understand exactly what your customers want and be sensitive to their needs, whoever and wherever they are. You have to offer a very wide variety of quality produce and services all over the world. And you need those same quality products for food service professionals to make their own culinary creations. You must take pride in producing delicious, healthy, and nutritious seafood, whether they're frozen, chilled, or prepared products. And offer marine ingredients packed full of omega-3 for the very young, and even the young at heart. And of course, never forget to provide for man's best friend. You should develop an award-winning sustainability strategy like Sea Change to ensure ethical, social, and environmental business practices within your own operations and the wider seafood industry. You have to be innovative and develop ways of enhancing your products and their sustainability. You should work with expert scientists and researchers to improve the way your seafood is caught, produced, packaged, and consumed. You need to value all of your employees, invest in their training and development, and encourage and nurture their ideas so you create a committed, loyal, and highly talented workforce. Well, that's how Thai Union Group did it. And we're just getting started.
I hope that gave you a better understanding of Thai Union's business, that we are more than just a canned tuna company. Now, I would like to give the stage to Khun Best, who will run our key highlights and recent developments in third quarter 2019. Thank you.
สวัสดีครับ Welcome all the international audience, and please note that this session will be conducted in English. For the third quarter result, Thai Union operation has been putting under pressure due to the FX volatility. Clearly, during the third quarter, Thai baht has been strengthening and appreciating against US dollars very significantly by about 7%, and even more so against UK pound and the euro by about 11 to 12%. So as a result, our sales coming in registered at about 31.8 billion Thai baht, which is down by almost 7%. This is mostly as a result from the currency Thai baht appreciation against all key major currency. But taking that aside, we will still report a declining sales of about 1.3% compared to the same quarter last year, taking out the FX impact. And still, we would like to say that all the raw material price also play a part with key raw material price such as tuna price down by 17% compared to last year, shrimp price down by almost 10% compared to last year. So as a result, we will be still left with about 1.3% of the sales decline excluding FX. However, we would like to know that on organic basis, we are continuing to see the sales volume still growing by almost 4%. Given the size of our company, this is still a very appreciated organic growth that we have delivered during the third quarter. On the gross profit line, I'm delighted to say that we have delivered a gross profit margin of 15.9%, and which is up by 10 basis points year on year. Please note that despite the fact that gross profit value has declined due to the function of sales decline from the FX volatility and falling raw material price as earlier cited, we would like to say that the structure of the company and the operation of the company as along with the profitability has actually improved compared to last year. So this is due to the fact that we continue to focus on high margin businesses or the marine ingredient, the launch of the tuna oil business on full year coming around this year, the gross profit margin recovery in frozen, mainly shrimp and salmon business, and pet care business are continuing to be robust. While the weakness are still found on the OEM tuna business, that is due to the volatile tuna price, which has suffered, put some pressure on the local tuna business. On operating profit wise, this is also depressed from lower sales. The operating profit has declined compared to last year. This is mainly to lower sales, but we are happy to say that on absolute basis, the SG&A expenses, the selling general administration expenses, increased by only 0.6%, which is due to the tight control. But however, due to the decline in sales, the SG&A to sales ratio, which is the most referred metrics, has been increasing to 11.2%, but this is mostly due to the function of the decline in sales. We like to know that part of the absolute increase in SG&A are due to the marketing expenses that has been increased as we have launched a number of innovative and new product launch into this year. On net profit wise, we have done as a result from the weak operating profit, we have delivered a net profit weakened by 21%. But if we take it on the reported basis, our reported net profit has actually improved about 4% compared to last year. However, on 9 months, we are still on year-to-date picture. We continue to be looking well with revenue. Obviously, still being affected by the volatile currency and strong baht, down by 4% compared to the first 9 months of last year. But aside of that, we have delivered a gross profit on year-to-date basis, increasing 9% compared to last year. Operating profit up 29% from last year, and net profit up 4.8% compared to last year. Please do note that much of these are due to a very solid improvement during the first half of the year, while the third quarter has found to be a bit relatively more challenging compared to the same period last year. And this has highlighted the longer term trend in terms of the profitability and sales mix of the company. We can see that despite the sales being down compared to the same period last year, the gross profit margin has continued to deliver an improvement on year basis to 15.9% compared to the 15.8% delivered during the same third quarter of year 2018. In regardless to the recent development, we are very delighted to say that the John West has cleared of the IUU fishing charge. Please do note that John West has announced that it is been not guilty. Verdict were declared for doing the business directly connected to the IUU or illegal, unreported and unregulated fishing. The CPS or the court offered no evidence against John West. The court has entered a verdict of not guilty for all counts, and as a result, this is a positive improvement and the key proof that Thai Union commitment to transparency and business practice, and we continue to deliver a fully sustainable and high quality product for all our consumers all over the world. This one is that Thai Union has successfully issued 6 billion Thai baht senior debenture perpetual bond on the road. we have about 12 billion Thai baht of refinancing need, of which 6 billion Thai baht has already been covered up by the senior bond issuance, which has been about 3 times or 3.5 times oversubscription, of which over 20 institutional investors has been participating in the book building process. However, we also plan to refinance another 6 billion of our refinance need through the instrument of the perpetual bond. Please do note that this perpetual bond is strictly for local, for Thai investor and not for the US investor by any definition. Okay, but this perpetual bond is that for the detail, Thai Union will issue up to about 6 billion Thai baht of perpetual bond, subordinate debenture to the public for the first time. The coupon rate is about 5% per annum during the first 5 years and payable quarterly. This perpetual bond is issued in compliance to the TAS 32 and will definitely be classified as an equity. So as a result of the issuance of this perpetual bond, we are looking forward to strengthening the balance sheet quality of the company and eliminating any constraint regarding the balance sheet and debt that we have on hand. In terms of the recent news, I mean, we have been issued a press release saying that there is no impact from the USTR, the US Trade Representative decision on the GSP eligibility. So as a result of the 25th of October last month, USTR has announced that it will revoke some of the GSP eligibility for some of the Thai seafood import to the USA. So as a result, some of the seafood goods will be subjected to the higher tariff effective 6 months down the road. But due to the specific classification, Thai Union key seafood export into the US market does not receive the GSP benefit from the get-go. So mainly the shrimp and the tuna product does not benefit from the GSP scheme. So therefore, I mean, Thai Union does not foresee any material impact on the business operation from the US Trade Department representative in terms of the revocation of the GSP benefit on the Thai seafood product. In regard to the innovation, during the third quarter, we have been setting aside $30 million into the startup food tech fund for the innovation mainly. And for the first project that we've been investing is a Flying Spark, which is the startup project to produce the insect larva protein as a protein substitute. The potential application is immense across the feed, pet care, human food, and even ingredient product. This would offer the high quality fruit fly larva as a protein that has a very short life cycle of 7 days. That's imply a very quick turnaround time, and the return in terms of the yield has been very high. So this is still in a very early startup process. We have set aside some of the fund for this project, and we are looking forward for more of the food innovation and food tech investment over the coming years. Aside of the innovation project, we also invest in the distribution. Over the coming weeks, we will be increasing our investment into Thamachat Seafood, which is the country's largest distributor of seafood, fresh seafood, and particularly fresh salmon. You can see them around in top supermarket, in Villa Market, and a key supermarket chain in the country. Thai Union Group will acquire an additional of 39.9% of the total share into Thamachat Seafood. And after the deal, since we already have 25.1% before the deal start, Thai Union will have a total holding in Thamachat Seafood retail of 65% post the deal. So this plan is meant for us to get an entry into offer a premium frozen seafood to the Thai consumer. We are planning to strengthen our presence into the Thai market through brand Q3 and Thamachat Seafood. And also we are hoping that this would enhance us to allow us to increase our distribution of salmon product and frozen and chilled seafood into the Thai market. For Thai Union Feed Mill, okay, we have been filing into the Stock Exchange and Security Exchange Commission that we are planning to list Thai Union Feed Mill by sometime during year 2020. Thai Union Feed Mill is the leading alcohol feed producer in Thailand. It has been one of the most consistent performers member and has been inception since year 2000. So I mean, during the first 6 months of the year, the sales are continued to grow at 9% year on year, driven by sea bass feed, and the annual sales are up 4.8% CAGR, okay, from during year 2016 to year 2018. This is a very solid company, very profitable as well. Since the inception of year 2000, it has never reported a single year of losses and has always been a good subsidiary to our company, to Thai Union Group. With the strength in R&D, I mean, it has been expanding the line of feed, while we are the number 2 market share in shrimp feed market. We are definitely number 1 in the sea bass or pakapong shrimp pakapong feed in market share in Thailand. So I mean, currently Thai Union has been holding about 66.9% of share of Thai Union Feed Mill before the IPO. And post the IPO, we are planning to issue more share and reduce the holding of Thai Union Group down to 51%. So therefore, we will definitely continue to consolidate Thai Union Feed Mill operation into our operation. Okay. We have our Mr. York Irie, our Group CFO, joining. For the award and recognition, we have been recognized and awarded for many awards over the last quarter. First and foremost, we have been awarded number 1 in terms of the global Dow Jones Sustainability Index in the food category for 2nd years in a row. This has marked a 2nd years in a row, which this should have been the key proof that we have been delivered our sea change strategy very seriously, and as a result, we have been recognized for very good conduct. And as outside of that, we have also won a Best CEO and Best CFO by 2019 Global Banking and Finance Award for Kun Thirapong Chansri, our CEO, and Kun York Irie, our Group CFO, for their contribution in terms of innovation and the supportive of the sustainability of the group wide. Other than that, we also been recognized in numbers of other forums in terms of the investor relation, best corporate governance, and innovation product as well. Without further ado, I mean, I would like to discuss on the financial result. And since we have Kun York here, please share with us the key takeaway for the 3rd quarter result financial, which should be the key discussion point today.
Okay, thank you. Good morning. Sorry, I'm a bit late. Key takeaways for Q3 financial results. We have quite a challenging top line. It's not unexpected with a very strong Thai baht against US dollar, euro, and British pounds. We have reported a sales decline in Thai baht of 6.8%. If we exclude FX impacts, we're still a little short with minus 1.3% year over year. Key impact here is, of course, the very, very strong Thai baht, and I cannot repeat this often enough. At current Thai baht levels of 30.50 to the dollar, this really impacts our export. It impacts our bottom line. At current levels, I would estimate that we are losing around $15 million in profitability every quarter because we cannot transfer this strong Thai baht into US dollar pricing. Now, the good news is we have a very solid volume growth with plus 3.8%. Our frozen business was growing 15.2%. Pet care and value added has been growing 2.6% in volume, and that's a really good sign for an underlying volume growth, which will support our Q4 initiatives and going into the next year. Our gross profit is better than last year. We're at 15.9%. Compared to 15.8% 1 year ago. So we continue our sequential improvement in gross profit margin year over year. In frozen pet care, value added, our margins are improving. A key challenge we have is in our tuna business, especially from the recent very drastic raw material price drops in tuna prices. Down to $900 for tuna, for a ton of skipjack tuna landed here in Bangkok. That's a really massive drop, and it weighs on our profitability and margin in the private label space. You will see this a little bit later in our segment report. Margins for our private label business have dropped from a very strong first half year. We're now again in a more normalized margin levels. Nothing to worry about, but it does depress gross margin growth somewhat. We continue to grow to manage our SG&A costs, at least in terms of Thai baht. We have decided to invest more into SG&A to stimulate growth. This is very important for us. We've invested $3 million in the US for a new product introduction to support some new products that we bring into the market. We have continued our marketing drive here in Thailand to support our traditional trade and our modern trade business in tuna and sardine mackerel and the Select brand. And we have continued our growth investments in Europe for our brands there. What we are doing is we try to cut whatever we can in back office cost, in G&A cost, but we do not want to reduce investments into growth. In this period, we think we need to stand fully behind our brands and our business. So operating profit is 1.5 billion, down 18.8% compared to a year ago. Very strong last year, but due to top line growth, top line contraction, and the currency effects that I've shared with you, we do have challenges in the operating profit. Non-operating profit, non-operating items below OP are more or less stable. We have some FX impacts. We have other income. We have very good contribution from our investment company in India, Avanti. Great contribution from there. And we still have some losses in discontinued operations from the factory that we've closed in Scotland and the fleet that we've sold in Ghana some years ago. And this brings us to a net profit of 1.374 in Q3. If we look at one of the most important drivers for our profitability, raw material price environment, raw material price development, and it's always this ability to either push prices into the market or hold off in the price reductions when raw material prices reduce. We're now at $900 per ton skipjack tuna. I have never seen anything like this since I'm here in Thailand since 6 years. I've talked to colleagues. This is a price level that's rarely seen, and I think we need to expect this to normalize again and get back and grow somewhat. But of course, it's also a time where we capture low value inventory. So we are investing heavily on inventory, whatever we can, we buy, so we can carry over some of these favorable raw material costs into Q1 next year. If we look at our sales development, I commented on it, minus 6.8% year over year, minus 1.2% quarter over quarter. And for the year, we now see a little bit of a contraction of 4%. for the 9 months. If we exclude FX, this is more or less flat. So you can see what heavy impact the very, very strong Thai baht has on our overall business, partly in our export, where we can no longer push out our cost in terms of price, and also in terms of translation effect, translating our foreign operations into Thai baht with a much stronger Thai baht. This is our revenue bridge, and you can see mostly affected is our tuna business. If we look at the -12%, half of this is the effect of raw material pricing that we are giving to the market. So this is a direct impact from the low tuna cost. In our private label business, we are calculating raw material price plus conversion cost. That's the customer price. So if the raw material cost is dropping sharply, our revenue is also dropping in line with that. So we do see that the contraction that we see in the business, half of it comes from price reduction that come from the lower material cost. The other half is volume decline, because in a period where raw material prices are dropping, demand is weaker, and we have some volume drops. All the other businesses, and that's the good news, are growing year over year. Our shrimp business grew very strongly. That's great. Lobster is again growing strong, and we earn quite a good margin on lobster. So we're actually overall underlying quite healthy in our growth if we exclude raw material pricing and FX into this business. If we look at the revenue structure of our business, we see that our domestic business is sequentially growing, and we're actually quite happy with that. Kun Best mentioned to you earlier, we have now invested into Thamachat Seafood. This will further increase our revenue here in Thailand. So we're really proud that we grow strongly in the domestic market, and Thailand has become one of the major growth contributors and profit contributors to the company. Europe, more or less stable, around 33%, a little bit declining because of the currency. US, same thing, we're now at 38%, a little bit declining because of the currency again. And we see the other markets, that's primarily Middle East, and other export markets being more or less stable. Our branded business is 36% of our overall revenue, plus another 6% in food service. So we have 42% of our business is operated under our own brands. And if we look in the ambient space, for ambient tuna and ambient sardine mackerel, we see that more than 60% of our business is actually branded business. Gross profit, we spoke about it, depressed 6% year over year, and that's a direct reflection of revenue, of the revenue contraction that we have reported. We see good profit margins, gross profit margins in our frozen business that have been able to grow their gross profit contribution. Especially in the US, we're quite happy. The team has been able to push very hard, select more performing and better customers, select better SKUs to sell, has been growing fast and had a fantastic Q3 in terms of their own gross profit margin for our US frozen business. Pet care, we have a great gross profit developments of well above 20%, a business that's growing double digit and will continue to earn very good margins for us. The ambient seafood sector and Kun Best will share a little bit later about this, is depressed. We have weaker branded sales because our European business translates with a stronger Thai baht with a lower amount into our P&L. So a lot of translation effects, but we also see that we still need to do more to return to real volume growth in Europe. The operating profit is, as a consequence, down, minus 3.4% compared to Q2. So we're now operating at around 1.5 billion. Q3 2018 was a great quarter. We are 18.8% below Q3, and the key effects as described. We have consciously decided to not cut marketing expenses. We could have done that and then improve our operating profitability, but with this we would have removed the important fuel for future growth, especially on our innovations. The year-to-date performance remains strong, so we are still, if we look year over year, nearly 30% up in our operating profit. That's a great sign of our continued underlying operating performance recovery and gives a very solid sign for the company in the next quarters. EBITDA as a consequence of this has not been growing. But if you look at the operating profit decline of 20%, our EBITDA is still flat. So we can remain our EBITDA performance, even though we have had top-line pressure, even though we have currency headwinds, our EBITDA remains more or less flat, 2.2% contraction to last year. That's not much. We end the quarter with 3.2 billion in EBITDA, so that's $100 million, a little bit above $100 million. And with this performance, I think we are pretty happy to see an overall year-over-year EBITDA growth if we look at the end of the year. If we look at the 9 months, we are 12% up, and we're now at 9.3 billion in EBITDA, and I'm pretty comfortable that we will achieve something in the magnitude of around $350–400 million in EBITDA for the year. Net profit completely in line with our operating profit development. All items below operating profit are more or less stable. We have another income of 100 million. We have a share of profit driven by Avanti Feeds of 59 million baht. And we have lower discontinued operations, losses from discontinued operations, which is also good. And we have, on the flip side, because we have a better profitability and because some beneficial tax scenarios last year we could not repeat again this year, we have a higher tax payment, and that brings us to a net profit of 1.374 billion. That's 4.3%. And if you look at the long-term series of our net profit, we've been absolutely stable in a range between 4.5% and 5%. Q4 18 was a little bit lower due to seasonality, but we're actually quite happy to be able, with all these headwinds, very, very low tuna prices, extremely strong Thai baht currency, we're very happy to remain in an above 4% profit margin level. There are no adjustments in this quarter. As you can see, we're always reporting adjusted net income for transparency reasons to eliminate one-time effects. We did not have any one-time effects on our operations in Q3. The earnings per share are 29 satang per share. That's down 20% in line with our net profit decline. We're up 4.8% year over year for the 9 months. So we are actually quite confident we'll continue our very strong dividend policy. We now have a dividend yield of, I think, well above 3%, 3.5%. So we are continuing to focus on our dividend payouts. Quick word to Red Lobster. We're now entering the difficult period. You recall Q3, Q4 are typically a little bit under pressure. We are slightly below last year Q3, and we will see in Q4, of course, again a drop in profitability. This is the low season for restaurant goers in the US. We continue to have our other income, our interest that we receive from our convertible instrument. We continue to have stable finance cost. We have good positive income tax benefits from our deal structure, from tax advantages that we get, and we had in Q3 132 million baht in net income contribution. So this investment continues to be EPS accretive. We have to watch out a little bit on Red Lobster that we see in the last couple of weeks. Very soft guest count development, and this is what we have been discussing with management of Red Lobster to do more for top-line growth, for returning guests, to become more attractive for consumers in the US. Our free cash flow is very stable. We have a cash conversion rate of 0.67 times EBITDA. It's 1 billion baht each quarter that we've done, a little bit over 1 billion baht each quarter. I'm very confident that Q4 will be equally cash accretive, and with this we will be able to support our strong dividend policy and contribute to some level of debt repayment. Now, on the debt level, we've been more or less flat. We started the year with 64 billion in debt. We now have 64 billion in debt, and the main drivers for this, again, is a very strong dividend policy. We've paid 1.9 billion to our Thai shareholders. There's some minority shareholders in Europe and also in Thailand, where we paid the remaining 250 million baht to. So very strong dividend policy. We of course have to pay our net interest to banks. We have well-managed capital expenditures at 3.4 billion, mainly focused on automation, on productivity, on digital transformation, and these are the three uses of our cash funds that we have. Now, you do see our net debt to equity ratio increase, even though we are profitable, and our debt is the same. So that sounds very strange. Now, a lot of our equity is sitting in Europe and in the US. So with the translation of the US and European balance sheet into Thai baht, their equity values translate into Thai baht at a lower rate. And this has led to an equity erosion. So if we go to the next page, we see our net debt has been more or less flat. We've been able to repay 3.5 billion in debt. We then had to take up some debt to pay interest, to pay our shareholders. So we are flat on our debt structure, but on the equity structure, we have a reported net profit of 2.8 billion minus the dividend paid. So we're still actually ahead 1 billion. But then comes a negative translation effect of 2.2 billion baht, mainly from translating US and European equity values into lower Thai baht values, and that's why our equity base has reduced. So this is a totally well, not artificial. It's a mathematical accounting effect, a translation effect on our equity. It does not erode our equity. It does. It has no cash impact. And once currencies normalize again, we don't feel that the current FX levels are in any shape or form normalized or reflective of real economic earnings powers. Once this normalizes again, our equity will automatically grow back. So we're at 1.43 times net debt to equity. If we look at the maturity levels, and this is before our recent bond issues, we've issued 6 billion baht in senior bonds, 4 billion for 10 years, 2 billion for 7 years. We see that 98% of our funding is still out of Thai baht. And look, the main reason for this is that funding in Thailand is substantially cheaper than funding in other markets. We're discussing a lot with banks if we should go to Japan, if we should go to US. US is very expensive. If we should go to Europe, but we do not feel that we are recognized there as an asset sufficiently well to give us loan pricing that makes sense. So we stay here in Thailand, and we're hedging into the target currencies. If we look at the maturity profile, and again, this is before issuing the 6 billion senior bonds 2 weeks ago, we see that our short-term loans have increased, and this will reduce now again with the issuance of more long-term loans. We have 61% of long-term debt, a large part with a maturity level beyond 2023, and we will further expand this with the issuance of the senior bonds 2 weeks ago. If you look at net working capital and capital efficiency, our return on equity is around 13%. Return on capital employed, nearly 10%. We have our net working capital under control, 109 days, 39 billion baht in net working capital. And out of this, the majority is, of course, inventories, 125 days, a bit high, but it is high because we see that we want to bulk up on inventories based on the low raw material prices. So with raw material prices at such low levels, we really do want to increase inventories to help our cost structure in the coming quarters. And with that, I pass to Khun Best for segment details.
Thank you, Khun Yok. And for the segment detail, I would like to present you here. As Khun Yok has mentioned earlier, we have been going through during the third quarter significant key operating items that has been changing rather drastically. With tuna price during the third quarter average at $1,200 US per ton. This is represent a decline of 17% compared to the third quarter previous year. Shrimp price also down by 9% and salmon price down by 4%. So all these price has affected our OEM or private label business, which is predominantly cost plus, and as a result, our sales has been partly affected by the raw material price as well. And on top of that, the more significant factor that has been affecting us is the currency, with Thai baht appreciating against US dollars by 7%, against euro by 11%, and pounds by 12% compared to the same period last year. We cannot deny that as the global company with the foreign currency exposure, our sales has been inevitably affected by the let's say appreciating in Thai baht. And we'll come to that to more of the details when we go to the regional geographic, because at the end of the day we like to highlight that our volume has not really been declined. In terms of sales mix, our sales mix are relatively stable. Ambient seafood, which is mostly comprised of canned tuna or canned product, still constitute 45% of company total sales. Frozen and chilled seafood, which is comprised mostly of shrimp and salmon, constitute 40% of our company total sales. And last but not least, the pet care and value-added product constitute the remaining 15% of our company total sales. For the operation breakdown, we can see that all the ambient seafood, which is predominantly canned tuna here, our sales have been declined by 13.9% compared to the previous year. However, if we look at the quantity, it has been declined by only 3.1%. Please do note that most of the decline as a result from the private label business, of which when in the situation when the tuna price is falling, our customer tend to remain cautious and with their orders. So as a result, it has been causing some of the volume decline. But on top of that, we can see the difference between the quantity decline and the sales decline, which could imply that most of the reduction of the sales in Thai baht term are as a result of both the currency and the raw material price decline. But not only that, if we look at the gross profit margin, our branded business still perform relatively well with a resilient 22% gross profit margin. And private label, on the other hand, due to the slow order, has record the lower margin during the third quarter of this year. But overall, our margin for the ambient seafood business with the right balance has continued to deliver 18% gross profit margin, only marginal decline compared to 19% reported last year. Now on the frozen and chilled seafood business side, while the sales are declining by 2%, we are happy to say that most of this, if not all of them, are as a result from the raw material decline. Because the quantity-wise, we have been delivered a volume sales growth of 15%, which is very solid. And on top of that, the gross profit margin has been delivered an improvement both on the total basis, from 10% to 11%. This is due to the improvement in terms of the shrimp product and the lobster product during the third quarter of this year compared to the third quarter last year. For the pet care business, sales have been up by 6%, quantity growth up by 3%, and the gross profit margin remain resilient. Our pet care business, along with the marine ingredient, has continued to be kind to us, and we have delivered a strong performance in regards to those areas. In geographic segment, North America still constitute almost 40%, 38%, Europe 31%, Thailand 13%, and the rest of the world another 18%. But if we drill down in the geographic segment, the North America sales declined by 5.1% in Thai baht term. However, if we remove the impact of the currency, the sales in the US would have been only declined by 1%. And most of these are as a result from the falling raw material price. Because the frozen business in the US, both shrimp and lobster, continue to deliver a solid sales growth. The more extreme example actually found in Europe, where the Thai baht sales has registered a decline of almost 10%, by 9.9% compared to the previous year. However, considering the fact of the Thai baht has been appreciated very significantly against euro and pound, if we exclude the FX impact, the euro sales would have actually been increasing by 1% compared to the previous year. So, but then despite the sales decline, the U.S. branded canned business continued to deliver a stable gross profit margin profile as I discussed earlier. On Thailand, this is where our strong growth has been delivered. We have growing 18.5% compared to the previous year. Clearly, diversifying to the local market, strong marketing initiative, our new partner Thamachat Seafood, and the numbers of product launch including chicken of the sea, including some of the new select product in the local market has been very well received. So as a result, our sales in the domestic market has been delivered a very robust growth of 18.5% compared to the previous year. Emerging market has seen some decline, mostly from the Middle East market. As noted earlier, in the environment where the tuna price has been on the downtrend, customers tend to remain a bit more cautious in terms of ordering, and therefore, during the third quarter of this year, the sales has been declined, particularly from the OEM business to mostly into the Middle East. However, for the China sales, continue to deliver the strong growth of 18%, and this is where we have been focusing our growth initiative over the last few years into the new market, and China is clearly outshine in this category, despite still a bit small. In terms of the summary, we have delivered a total sales of 31.8 billion Thai baht with a margin of 15.9%, up by 10 basis points compared to the previous year, and as a result, the gross profit margin was at 5 billion Thai baht. Okay, and on that note, I would like to summarize the presentation.
And that is the sum of our presentation. Now, may I move into the Q&A session. If you would like to raise a question, please feel free to raise your hand and ask in either Thai or English. For those of you watching this broadcast, please feel free to key in your questions. The floor is now open.
And please.
So as an experiment, what would you do if the 1 to 30 US dollar to Thai baht range rate became the new normal?
So I think that a couple of things, right? One is we have a very strong hedging policy for our operational business, so we are not really affected by weak or strong currencies in our trading business. So we hedge around 50% of all our inventories. We hedge 100% of accounts receivable, and we hedge 100% of our intercompany loans into the destination currency. So from a cash perspective, we're not affected at all. Now, the real effect is one, a translation effect, where US and European financial results are translated into Thai baht at a lower value. So if you had $1 billion in revenue 3-4 years ago, then this would translate into Thai baht at 34 billion Thai baht revenue. If you do the same thing today, same performance in the US, it would translate at 30.5 billion. So you would have contracted 10% without anything happening to your business. So this translation effect is enormous, and there are companies that are taking out financial instruments to hedge against translation effects. I'm absolutely not a friend of this because there's no underlying cash flow that you should hedge against. So you're creating actually even more volatility to your financial statements if you do that. So we're not doing any translation-related hedges. The second part that affects you really is you have Thai baht cost, and you're exporting to the international market, so you need to translate your Thai baht cost into a US dollar price. So if you have 100 million baht in Thai baht cost, then, $100 million Thai baht cost, you translated this 5 years ago into a US dollar price, then this was $25 billion, $28 million. If you do this now, you end up at $31 million, right? So you have to increase your prices in order to maintain your profitability. Now, the Thai baht is by far the strongest currency in the region. Most of our competing countries have not a currency development that is as positive as the Thai baht, not as strong as the Thai baht. So we cannot push this price differential out to the market in US dollar pricing, which means we have to accept that we can't recover all our cost in the prices that we do. There's only one remedy to this: productivity. So we put a lot of investment into productivity, become more labor productive, take cost out of the system, and put a lot of focus on cost reduction and labor productivity in the plants. The second thing we're doing is we're shifting our production focus to products that have higher margins. So you try not to compete on commodities, but you look at areas where you have a value added and where you can still command some level of price premium. These are the two main strategies, and especially on plant productivity, we're putting a lot of focus on this. Does that answer your question?
Yes, thank you.
There's a question from the online. Can you update about the legal challenge, especially if we have can you update about the accrual on it regarding antitrust case in the US?
Yeah, we made a second accrual in Q2 this year. We have spent some part of this accrual already in settlements. We are in the process of making further settlements. We're now settled with around 90% of all plaintiffs in the US. So I think we're pretty far ahead. There are a couple of plaintiffs that are unreasonable, that have completely unreasonable requests from us in terms of what they want to be compensated for. We've settled with large customers like Costco, Walmart, Kroger, and others, and there have been reasonable settlements, and we are ready to settle with anyone in that range. We do not expect to have to increase our accrual anytime soon.
Okay, there's a question from the online as well. Why do we issue perpetual bond with the high interest of 5%, which is more than our effective interest cost?
As you see, we have tried over the last years to deleverage our net debt to equity from the 1.36, 1.37, 1.4 times net debt to equity down to 1.1 or below. We've not been able to do this. This is weighing on the discussions that we have with investors. It's weighing on our strategic discussions, and we've decided that we want to take a large step into deleveraging. There's absolutely no financial need for us doing it. We have no plans to make a large acquisition. We just do want to move on with our strategic discussions, how we want to develop the company over the next 5 years. And for this, a net debt to equity of 1.1 or 1 to 1 or 1 to 1.1 is more conducive for such discussions. There are no other reasons behind that.
I would like to conclude today's Opportunity Day for third quarter 2019 results. Thank you very much for joining us in today's session, and thank you Kun Jörg and Kun Best for being our key speakers today. We look forward to seeing you next quarter. Thank you very much.